Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. And today's contract tip is 7.5 financing tips to get your contracts closed right now. So we are in April of 2020 and we are experiencing all kinds of craziness with the pandemic. The coronavirus pandemic, COVID-19 pandemic, and there are all kinds of financing issues going on right now. So wanted to just give you agents a few tips for your contracts to be able to deal with these financing issues that are going on at this crazy time right now and get your contracts closed. So tip number one is use a lender that you know, love, and trust and can have great ongoing regular communication with. The lending industry is changing on a daily basis right now. There are lots of rapid increases in credit and minimum credit scores that are required for loan approval, and there are different funding sources that are disappearing, and our buyers are being furloughed short term, and some of our buyers, they're still maintaining their jobs, but they have fewer hours than they had. So there are all kinds of issues that are going on right now that you as a real estate agent need to address in your contract in order to get these deals closed in this environment. So the first one, like I said, use a lender that you have had a professional relationship with, and lender that you know, love, and trust and have ongoing communication with on a daily basis, on a regular basis, because this is so key. Lenders are checking a buyer's verification of employment, VOE, and credit score the day of closing or day before closing. So, and we have things changing on a daily basis. So that's tip number one. Financing contract tip number two is you need to check the interest rates. They are still overall very low, but there are a lot fewer lender credits right now that used to be available. So the interest rate might be a little bit higher because it does not reflect any lender credit. There are very few lender credits right now, and some other concessions the lenders aren't offering right now. So what a lot of lenders are doing right now is they are offering a buyer can buy discount points to offset what was given as a lender credit for a lower interest rate. So tip number two is have your buyers not use their cash to buy a discount point, but use their cash to offset some of their debt to increase their credit score. The credit scores are way more important right now. A good credit score is vital for just about any loan program right now, especially we're seeing even FHA has increased their credit score, and VA is actually a little bit more lenient than FHA. But so the tip is, don't have your buyer use their cash for a discount point to buy down the interest rate. The interest rates are still phenomenally low, and there will be the opportunity to refinance at a later point in time. But a better use of their cash on hand may be to buy down some of their debt, offset some of their debt, pay off a credit card, so forth and so on, to be able to do a rapid rescore and increase their credit score. Financing tip number three is, especially if your buyer has already been pre-approved with a lender, which they absolutely should be before you ever go out and look at a home right now. But put in a short closing date. So get with the lender that you know can close the deal quickly, and do a short closing date with very little earnest money. So the offset is, if something were to happen, there's very little earnest money potentially at risk, and the seller's not off the market for that long a period of time. So that is financing contract tip number three. Financing contract tip number four is extend the financing contingency through closing. So I have been asked to help with, because we are having buyers totally pre-approved, and then all of a sudden ready to close, and a couple of things happen. Either their hours have been cut back, they've been furloughed for 2 weeks, or the minimum credit score for their loan program has gone up. So again, with these lenders doing some last minute checking, we have buyers that are outside of their financing contingency and all of a sudden aren't able to get their loan scheduled to close. What do you do? So I've been asked to help with a special stipulation to do as an amendment to help in these situations. And you know, there's really no specific special stipulation that we can think of that would really help in this situation, because there is such a variety of issues that are going on. Like I said, a little bit change in hours, difference in bonus income, short-term furlough, things like that. So the best thing to do would be just extend the financing contingency. Even if it's over, do an amendment where all parties agree the financing contingency is back in place, because that covers anything that could happen. And even outside of this environment, unfortunately, we have buyers that are fully approved, you know, even outside of these crazy times that we're in, and right before closing, they do lose their job, or they do lose their bonus income, or something like that. So, you know, it is a little bit different time. There are different reasons that are affecting buyers' employment status, but in general, rather than coming up with a specific special stipulation that may or may not cover a situation, the best thing to do would be to just extend the financing contingency if the seller will agree, because that will protect the buyer for any reason, and it already has all the verbiage in there regarding notices and what happens with the earnest money. Now, that was tip number 4. Tip number 5 is the same thing, but on the other side, if you're representing a seller, have the financing contingency go through closing, but on the seller side, that's fine, but add a kickout in there so that the seller is still able to market the property for sale and potentially negotiate another offer, and then give buyer number 1 first right of refusal, or so many hours to kick out, to stay in there or go through, to give that buyer one more chance to stay in the contract, depending on what's going on with their job or their loan. So that's sort of the same. 4 and 5 are very similar. One is more from a buyer perspective, just extend the financing contingency, and the tip number 5 is from the seller perspective. Yes, I'll extend your financing contingency through closing, but the concession is I still have the opportunity to get in another contract. Financing tip number 6 is don't extend the financing contingency, just negotiate whatever the buyer and the seller negotiate for a time frame in there anyway. Then after the financing contingency, have an option in there to extend the contract for, let's say, 30 days with some additional earnest money. So that would be a situation where a buyer maybe has been furloughed for 2 weeks, or maybe has temporarily had their employer cut back on hours, but the employer has said, look, you're going to go back up to full hours in 2 weeks. Well, a lender isn't going to take just the say-so from a boss. They're going to actually need to see a couple more weeks of pay stubs. So that would necessitate an extension of the purchase and sale agreement, just so the lender can get 2 more pay stubs in there potentially. So again, after the financing contingency, have an option in there to extend the contract for 30 days. And again, the seller concession is perhaps put in additional earnest money, and the buyer's going to know if that's a good risk or not based on their conversation with their employer and with their lender. And financing tip number 7 is perhaps the buyer and the seller want to negotiate for a lease purchase. Same thing with some of these buyers and their employment status, a little bit unsure or changing based on what's going on in based on what their employment industry is, what's going on in their area, what's going on in the state. There might be things where short-term, their financing being approved for a loan could be not necessarily firmed up right now, but absolutely would be no problem in 30 days or 60 days. So another way to address that issue would be to do just a short-term lease purchase to have the deal go through, especially if a buyer doesn't have anywhere to, depending on their living situation, where they're living now and where they have to move to. And if the seller needs to move on, then a lease purchase might be a great option for both buyer and seller, and just again close at a later date. So again, it's just another extension of closing, but with a short-term lease in between. Now, I have had some agents ask me about temporary occupancy for buyer prior to closing. That's another option. As a broker, I hate advising that. That's always just a little bit riskier versus a lease purchase. And the difference between a temporary occupancy agreement for a buyer prior to closing and a lease purchase, you agents look at the verbiage between those two documents. One is there are time frames in there. If it is going to be for definitely more than 60 days, temporary occupancy, that's not temporary, and I don't think that exhibit would work. So you would definitely want to look at a lease purchase. It's not an outright lease. It is a purchase and sale agreement with an interim lease prior to closing. But that could help the seller as well if the seller is making another purchase and they need to show their current home being leased or sold, if that there's a contingency there. So that might be another option to work out between the parties. So those are the 7 financing tips to help with your contracts to get them closed right now. Promised you 7.5, right? Well, the half of a tip is if you are already under contract, then look at those 7 tips and use that as an amendment. So kind of a little sneaky one, but that was the half a tip. Thank you guys so much for watching. Again, during these times, the keys are communication, patience, creativity, and communication. Everybody, please be kind to one another and work together more than ever. Communicate with your clients, with your lenders, with your closing attorneys, with your co-op agents, with your brokers, with your colleagues. And we will get through all of this together. And thank you guys so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.